Hi friends, and welcome to another Arctic Money portfolio update now for summer 2026. Without further ado, let's hop into how my portfolio looks today, 7th of June when I'm filming this. So Flow Traders 36%, my biggest position, no change in that. I have been actually selling my uranium holdings since the last portfolio update to buy some HIMS and Auster, which have, especially Auster, gone up in the prices lately. So Auster has been actually via buying more and via organic growth in the stock price, now even 19% of my portfolio. A bet on physical AI robotics is Auster. Hims and Hers, 15% is on a green side in my portfolio, but I have been buying both Hims and Auster quite a lot. So actually surprised myself even when I see these two being what is that, 34% of my portfolio. Wow, that's quite a lot. But that's my US tech exposure, let's say so. Kamux, 9%, that's used car sales in Finland, Sweden, and Germany, has been the stock in my portfolio that is most on the red side. Used car sales, I don't think they have a moat, so it's a risky business to invest, as I have seen after minus 45% or so decline in the value of my stocks that I own. But yeah, I think the stock price is still really low, holding it on my portfolio, waiting for my country Finland's economy to finally turn to something better, hopefully. And that would also obviously pick up the demand for used cars if the economy starts doing better here in Finland. Then I have 3 uranium. Yeah, well, the biggest change is that my uranium exposure has now gone down a little bit. I have 17% in Global X Uranium, ETF, Yellowcake, and Sprott Physical Uranium Trust. 17% in uranium at the moment. I don't think the uranium thesis has gone bad or anything like that. I just felt that I had better opportunity with Auster, which I did. At least in the short term, I have been making more money with Auster than I could have made with uranium. Uranium thesis is still intact, in my opinion, but it's a difficult one because at the same time you have everybody kind of knows that, or I think people should know that there is a huge supply-demand gap opening up for the coming years in uranium, which would inevitably mean that the price of uranium would go up. But still, this has been the situation for, let's say, 2-3 years now. I have been waiting the price to pick up and it hasn't. Well, that could mean that maybe the supply is coming online. Maybe there are ways to get the uranium out of the ground, for example, with better robotics or something, I don't know, better in the future. But it could also mean that when you postpone making those long uranium contracts, you postpone everything that would start uranium mining in the world again. Well, then that means that the supply-demand gap is growing even bigger, and when the move in the stock price or the spot price of uranium finally happens, it will be a violent one. I don't know. Let's see if uranium keeps dipping. Might buy more. I'm following the situation. Still 17% though. Then 2 small positions. Amsterdam Commodities back in my portfolio with 3% exposure. Company I used to own a few years back, made good money with it. I think it's cheap again. Green Landscaping AB, that's landscaping services mainly in Norway, Sweden, and in other places in Northern Europe. That's a small 2% in my portfolio. So that's my portfolio currently. Full disclosure, that is, when we look at the left upper corner, that is where 80% of my net wealth is. I have skin in the game. Hope you guys appreciate it. This is 80% of all the money I own in these stocks right now. Then cash situation, I don't have any. Practically, I am fully invested. A little note on the red text there. Earlier, when I presented the S&P 500 dividends reinvested numbers at least, and maybe the index investors, I have to say I'm not quite sure, and I would need to go back maybe and check it, but I have maybe shown you a little bit too high numbers, and I have been a little bit too harsh on myself when I'm comparing myself to S&P 500 and index investor dividends reinvested, because I obviously I live in Finland, and I pay the taxes in Finland in the Finnish tax system, and I might have look at these numbers with very much too low tax burdens. So I have now incorporated a little bit more, made these gains that S&P 500 and index investor have, which we're going to talk about next. I have made them more comparable to my investing here in Finland, with the Finnish tax rate on capital gains being 30%. What was it now? 30% on with 30,000 euros gains, and after that it goes up to 34%. So yeah, live in Finland. We have high taxes in this country, quite socialistic country. Surely, if some of my international viewers are listening to this, but that's Finland. I have to live with it. Still, I feel like it's kind of fair that I compare myself to S&P 500 investors in the Finnish tax system, because yeah, that's I feel that's a fair competition then, because I live in Finland. So the imaginary S&P 500 index investor and S&P 500, I guess it's only fair that I take some Finnish tax system in them too. But this is a change to all the other portfolio videos updates I have done before. My gap, my losing to S&P 500 has been, I have been showing that I'm losing too much, but that will change now starting from this video. If I in the future wrap up these videos somehow, I will then have another look at those old portfolio updates I have done, and maybe tweak a little bit those numbers so that you know, so that they are more realistic, comparing me in this Finnish tax system that I need to operate in. Okay, I'm sure you understood that. Just wanted to give this out if for some reason in the future someone of you starts wondering these numbers that they don't add up or something. Taxes is here the reason. Okay, you understood that. Let's move forward. Averaging there in the below, average annual inflation rate in Finland since 2018 has actually been 2.57% until this day. International viewers, surely you wonder how can it be this low, but actually it's amazing that Finland on average has had pretty low inflation. This is due to euro, which we are part of obviously here in Finland. There are differences in the inflation rate between EU countries, euro countries, and yeah, the US inflation has been higher than it is in Finland. So why am I showing you the average annual inflation rate in Finland since 2018, since Arctic Money started, when I started investing? I'm showing it to you to demonstrate that this, I have talked about this on my channel earlier, but this is the lowest goal, the lowest hurdle every investor must win. This is a must-win battle. You need to win your country's inflation rate, because if you win it, that means you're getting richer. If you lose to inflation, that means you're getting poorer all the time. So the lowest goal every investor needs to beat is the inflation of his or her country. And Arctic Money since 2018, as you can see, plus 45% is my portfolio annualized. That is plus 4.5%. So I am beating by 2% handsomely the inflation in Finland. So I have been getting richer all the time. I have to take a win there. I'm happy for it. Obviously, you know, you who have been watching my videos, this is not enough. I want to have better gains, but I know that this game requires patience. While I'm waiting for my time to come, I'm still really happy that I'm beating the inflation by this big margin, because that's the lowest goal, as I said. I'm happy about it. But then, if you start comparing to S&P 500 dividends reinvested, plus 145%, so 100% better returns than me. absolutely crazy annualized gains, 14.4%. So if you lump sum invested everything you have in S&P 500 in January 2018, this is how much you're beating me. Well, not many people have this opportunity, obviously, because we go to work, we get money every month. So you didn't have all your future money back in 2018 January, obviously. That's unrealistic situation. But what is a realistic situation is that there could be some index investor who monthly invests in S&P 500 with dividends reinvested, and that person is up compared to me in the same time frame, plus 74% annualized 6.7%, which is obviously very, very good returns. And you can, if this is you, congratulations. This has been the last 8 years. S&P 500 has been, well, Nasdaq has been the even hotter ETF, obviously, but as S&P 500 is the world's biggest, I guess. That's where I'm comparing myself to, and it's the broadest basket of companies in United States from all the industries, not only tech, as Nasdaq is tech-heavy ETF. So S&P 500, I think, is the fair benchmark here, and that's why I'm using it. Yeah, obviously, that has been the hottest. United States has been the hottest market last 8 years in the world, no question about that. You already know now. You already know that I'm not expecting it to continue. I have predicted on my channel that, especially if you take inflation into account, but maybe even without inflation, I am predicting that next 10 years of United States S&P 500 might flatline, 0% gains for next 10 years. It has been a long time since the index has been performing so badly for so many years. 2008 is almost when the global financial crisis happened. I wasn't investing back then myself. I was probably doing my military service, and I was in high school. I wasn't an investor back then. I was in the military or in high school, and so my generation who have been investing have never seen a true recession. The closest one we had was obviously the COVID crisis. That was pretty wild times. We went down a little bit and then extremely violently up. So that's not a real recession. A recession is something that the S&P 500 would move years downwards or flatlining, not going up. And that's where I think the resolution of index investors will be then seen. Are you able to buy every month the same amount of index, even though the index has been going down every month for last 2 years? Can you do it? That's a question for all the index investors. I don't need to think of it. I invest in companies, not in ETFs, and the companies you see right in front of you. Should there be volatility in the market, flow traders will do really fine. Has been doing good since the Iran war obviously started and created volatility in the market. I'm happy with the portfolio. My time for overperformance compared to S&P 500 has not come. It cannot come when US markets are this hot, but when the day comes that they are not hot anymore, that's when we see what I am made of, let's say so. This was my portfolio update for the summer. Next one I'm gonna give you in fall. Any questions, let me know in the comments. Thank you for watching this video, and I see you in the next one. Bye bye.